China now is going through the structural reforms which will lead to the slower growth rate.
I think as you will see that the growth rates are normalizing.
To what extent do you think that the Eurozone economies have been recovered?
Weaker euro is helping countries to export better.
在持续数年的量化宽松结束之后，美国经济逐步复苏，美联储正在酝酿加息。而结束了持续多年的高速经济增长后，中国经济正步入调整经济结构的新常态。央行降准成为2014年引人瞩目的动作。与此同时，希腊退出欧元区的激变尚未停歇，而欧洲央行已经在推出欧洲版的量化宽松。货币政策的迥异反映了各国不同的经济走势，而最终收效能否殊途而同归。
Since last year, China has begun to reduce its interest rates, while in the US, the Fed is considering the opposite direction. So what are the implications of the shifts in global monetary policy?
I think the Fed is facing a unique environment because the US is one of the few countries that has solid growth. Europe, for example, is reducing its interest rates and actually has run out of room for maneuver on interest rates and is contemplating quantitative easing. The same is happening in Japan. So, like Japan and Europe, China faces a weaker economy, some soft spots in the economy, some adjustments in the housing markets and in the real estate markets, and it's responding appropriately by lowering interest rates. And we expect some continued lowering of interest rates over this year, maybe 2 more moves of around 50 basis points. And the Fed will only gradually raise interest rates, probably starting in summer. But in my view, the weaker inflation data will not force the Fed to go fast. So my expectation is the Fed will do a moderate rate increase. It will be very data dependent.
Yeah, with the divergence of the global monetary policy, what do you think that China can do to face this challenge?
Well, there's a global economy that is diverging in terms of fundamentals. Growth is somewhat weaker in China, in Europe, and in other parts of Asia, and the US is facing a stronger environment. But one of the big changes environments over the turn of the year has been the oil price that has come down quite a lot. So a weaker oil price, at least for oil consuming and oil importing countries, is like a consumption support that will help these countries to move forward. And in addition, the dollar has been appreciating across the board. So a weaker yen, a weaker euro, and to some degree a slightly weaker RMB over the year will help those economies to continue to export. I don't really see a big differential development for this year. Exchange rates will continue to come down somewhat, but the US will be the area where monetary policy normalization will be the biggest debate. It will be asked whether the better unemployment data that we see are not partly dependent on a fall in participation rates, and the Fed will probably like to see some robust labor market developments before they really embark on a series of rate hikes. So I think the outlook will be very, very data dependent for the Fed, and I see a more cautious development as a result of the oil price decline. The oil price decline has just given the Fed a lot of optionality, and I think the Fed is likely to use that optionality over the year.
Yeah, there is concern that expansionary monetary policy is precipitating the financial market imbalances that may lead to the next downturn. So what is your view?
Well, there are some dynamics in financial markets that are clearly driven by a huge amount of global liquidity. And that has been pushing up equity prices, it has been pushing up financial prices in general, and it has been feeding into some very strong dynamics in housing markets. But as the global economy is probably seeing some withdrawal of global liquidity, first and foremost by the Fed, that markets are normalizing as well. And so in China, for example, we expect housing starts to come down by another 10% roughly, largely to absorb the excess capacity in housing. And we will see a normalization in the Chinese economy. There is a weaker growth ahead. Our projection are 6.8 this year and 6.5% growth in China next year. A weaker housing market, some correction in demand. But the economy as a whole is basically moving to a more sustained equilibrium, to more sustained growth, because it's not so much driven internationally by export growth. Export growth will continue, but at a slower pace, and domestic demand will take a bigger part of the growth picture. And that's good, because not all economies globally can rely on exports. Domestic growth and fostering domestic sources of growth will be a big part of the picture in the future. And so the oil price will help support domestic consumption in China, the normalization in the housing market, and the shift from housing to equity investments will support portfolios. And I see an orderly correction ahead. There are some risks, so the authorities need to manage those risks, but I think they're very aware of these risks, and I think so far they've done a good job in managing these risks.
So how should the central banks take the financial cycle into account when setting the monetary policy?
Well, basically by having a longer-term orientation.
Yeah.
At the moment, central banks were very much focused on dealing with the cyclical impact of the financial crisis, a steep downturn in 2008, and some slow rebound in some economies. Over the medium to long term, central banks should have a longer horizon at which they look on how they steer the economy. At the moment, the 2 to 3 year horizon that they use for their projection seems to be a bit on the short side. Central banks would have to look at the long-run impact of their action on financial markets and on asset prices in general, in addition to consumer prices. And I think most central banks are taking that into account. The big question, however, is which tools do they use? Because the interest rate tool is already designated to the cycle and to steering consumer prices.
Yes.
So central banks need other tools, more microprudential tools, to deal with the financial cycle. And they will have a mix in the future of macroprudential and microprudential tools, basically tools geared at the financial cycle itself, other than interest rate hikes. For example, loan-to-value ratios, liquidity policies, lending policies, credit policies, which they will use in order to have a more multi-pronged approach to dealing with the financial cycle.
Yeah. China now is going through the structural reforms which will lead to the slower growth rate. We have the new word, the new normal. So how do you look at this change?
We look at it in the following sense. I think as you will see that the growth rates are normalizing, as you will see that the housing starts are correcting and there is a slower housing start, and as you see that assets will be rotating from housing-related and real estate-related investment into equities, we've seen a major boom in the equity market in China last year, the authorities need to do something about keeping the pace of reforms going. And as we see these corrections in the market and financial markets correcting, I think this will accelerate reforms in China. It will accelerate the state-owned enterprise reform, in my view. It will accelerate the financing of the provinces reform that needs to be done. And it will probably lead authorities to focus more on growth-enhancing reforms of service sectors, because services and the new economy have to, in some degree, replace the traditional economy that was export-oriented and that was oriented on the production of goods that are internationally distributed.
世界经济危机已过去数年，当年的风暴期使地美国已经步入了经济强劲复苏的轨道，而欧洲仍然在泥潭中徘徊不前。希腊的债务问题没有明显改善，欧洲大国之中只有德国经济稍显亮色。欧元和欧洲经济的未来将向何处去
？Last year, the economy of Germany has been better, but not all countries in the Eurozone are as good as Germany. So to what extent do you think that the Eurozone economies has been recovered, and what will be the next move for European monetary authorities?
I think we now expect, because of previous announcements and signals, the ECB to make an announcement for a broad program of asset purchases already at this meeting. It's going to be I would say, combination of buying corporate bonds, covered bonds, and also to some degree sovereign bonds. They're going to be focused on the high quality sovereign bonds, so higher rated bonds will probably get a higher weight in that program. The exchange rate of the euro has come down from roughly 140 of the euro to the dollar to around 180 as we speak. Weaker euro is helping countries to export better, and so we see again some export-led recovery in Europe that will be there. The German economy is still the main driver of the European economy going forward, and now there is a second issue that will help the Europeans, and that is it's not just export, it will also be consumption that is supported by a weaker oil price. So most of the European countries are oil importers, and therefore this is like a small conjunctural program that is helping the European consumption. And last not least, in addition to monetary policy stimulus, a weaker exchange rate, and some support from consumption, there is likely to be a less restrictive fiscal course going forward. Fiscal drag will be slower and lower as we move forward, and all of these factors, together with more international demand, in particular out of the US for European exports, will help the European economy to recover.
Yeah, on January this month, January 25th, that Greece will have the early presidential election. People have two worries. The first one is whether it is a time point for Greece to exit the Eurozone, and if it does, what the influence will bring to the Eurozone and the global market. And the second worry is, will it influence the launch of the Euro QE? So what is your opinion?
So I'm not worried about the first issue. Vast majority of the Greeks are very committed to the euro. They like to be in the euro. They didn't like some of the adjustment that was necessary to bring their economy more in line with the rest of European average, but that adjustment has happened, and I put a very, very low probability on Greece deciding to ever leave the euro. That's a different thing on whether Greece will choose a government that is more right or more left or in the middle. So I'm not concerned about the Greek election. I don't think they will lead to a new view at the Eurozone in general, because Greece, I think, is committed to staying in the Union. The second one is, going forward, I think this will not have a big impact on the European economy. The Greeks have entered into some international agreements, largely because the Troika and others have been given money to Greece. Greece will remain in the euro. Probably they can negotiate some more programs in the future, but that's only possible if they stick to the terms of the agreements that they've entered into in the past. And I think that's very likely to happen.
Yeah, the launch of the Euro QE is on the schedule. We expected it will be launched on February. So do you think that if it launches the Euro QE, it will have the big influence to the global market? And how about China?
I expect that they will launch it, but I don't think it will have a big impact. The real problems in Europe are not the availability of liquidity or any support by the central bank for the economy. There's been a lot of support by the central bank and the ECB for the European economy. There's no lack of that. And having said that, I think going forward, what the ECB is trying to prevent is the shrinking of its balance sheet. But that's a different issue than actually having a success in reaching 2% inflation with such a policy, which I think will not happen. The recent decline in oil prices and the falling of inflation towards zero and actually dipping slightly into negative territory will be to some degree reversed. But European inflation is now no longer the product of European output gaps and whatever Europe does. It's the result of global output gaps and global commodity price developments. So I think the ECB will probably be able to stabilize somewhat the mood of investors around the outlook for Europe. They will not be able to reflate the European economy. And by and large, what Europe needs is not more monetary stimulus. We need more long-term growth-enhancing reforms. And that's what Europe has been lagging. So the ECB can buy some time, and for the third, fourth time, the ECB is again buying time for European governments to act. What has been lacking is action on the government front. And I hope this time around the governments will understand that ECB action alone, which we already saw in 2012 and 2013, cannot do the trick, because 2014 has shown that after some time, even with bold central bank action but no follow-up by governments, the international markets lose confidence and they are demanding more and more central bank action.
Yeah, last month that the former U.S. Treasury Secretary Larry Summers pointed out again that some countries that they are still facing the problem of secular stagnation with weak domestic consumption. So do you agree with him?
I don't think that that is really at the core the most likely outcome. It's a risk. And I clearly share the view that Larry voiced, that there is a risk that if Europe doesn't act on doing growth-enhancing reform, that they could face sustained growth problems. But I think Europe can do a lot of reforms that will reinvigorate growth. Take Germany in the early 2000s. We had exactly the same debate. Germany had very little growth. There was a discussion that Germany was the sick man of Europe. And what Germany needed was pension reforms, labor market reforms, And we did that between 2002 and 2004. And that has reinvigorated the German economy. We used to have an unemployment rate of around 10% then. Our unemployment rate has fallen very, very strongly towards 6% now.